No new window. Can everybody see the no stock screen? I can't tell. Kelly, can you hear me and see the screen? Okay. We'll work up a trade. This is the NASDAQ stock exchange. I'm long 1,000 shares of this, and I'm also long 1,000 shares in the New York Stock Exchange, which I had to hedge most of the day, but kind of thumped on me. So I will show you, first off, this trade. This is something I was working out. Now, according to axiom number 1, if we had not bought the NASDAQ 100 stock market, I would look to buy it right here. So that high is about 35.60. So I'm going to work up a whole trade based on all the axioms. This is Thinkorswim. I wanted to do this last time. I switched to a really black screen. I don't want NYX, sorry. I wanted the NASDAQ stock exchange. It's NDAQ. And for the first 30 minutes, I'm going to go through a bunch of these. Okay. I'm going to click a buy here. This is their paper trading module. I have these in for real and interactive brokers, and I'll show them to you. We're going to put in a sell at the same time. Then we're going to look at an option. We're going to talk about this for just a second. I need to bring up this spreadsheet. So we're going to work between 3 screens. This is why I have to have 3 screens, but we're going to try to work between this. So I'll be flipping back and forth. First off, on Thinkorswim, I'll get that turned off right now. Okay. First off, the first thing we're going to do is we're going to go in and we're going to say we're going to buy this NASDAQ stock exchange right above this price. And it was 35.60. Okay. Let's pop in here at 35.60 and put in a buy, and I'm going to change this to a stop limit. 35.60. And it's got a $20 or a $2 ATR, so I'm going to buy it at 35.80 also. So that's called a buy stop limit. Does everybody understand what I just did? Buy stop limit. Okay, so I loaded up my buy signal at 35.60, no higher than 35.80. I'm going to put a target in on this. The target in, let's take this blue MA. Well, let's take this support level. This support level is about 38.92, so let's go 38.50. Because I don't ever try to get all the way to the top. Let's see what the top of this bar is. Yeah, 38.50 sounds good. Okay, we'll jump back. Like Kerwin, we're setting up an order here. 38.50. 38.50. Then what I'm going to do is I'm going to go into this and make this a good sell cancel. And then I'm going to change, this is to sell to call. Now this is what we were talking about last time. This was kind of important. I'm going to go in and say, all right, I'm going to look at our buy and our sell. I'm going to say the current price of NYX, or not NYX, of the NASDAQ one is, the NASDAQ 100 is 35.51. Okay, so 35.51. We were going to buy it at 35.60. 35.60. Okay. The next thing we're going to do is we're going to say if it goes below, if it gets above this point right here, hopefully everybody can see the chart. If it goes above this high right in here, great buy, it broke out above one resistance point. But if we go below this support level down here, we'll be below 1, 2, 3, 4, 5, 6, 7 support levels. So we're going to put in our stop to convert it right back here at 35. If I go below 35, I'm going to convert the trade. Okay, converting means I'm going to sell a covered call. Let's go 34.99. And to do that, I'm going to come over here to find my option. And my option, the bid price of it, I need the delta over here. I've got the delta. The bid price is is 160 with a delta of 59. I'm going to try to do this one for 550 with a delta of 95. So I'm going to go 550 is the bid, delta is 95, or excuse me, delta is 95, and I believe that's the $25 strike. It's the $30 strike. $30 strike. If I do that, I would still, using that stop and that entry, remember I'm getting in at 35.60 and I'm looking at the maze, I would lose 59 cents a share. So that one won't work for me. Alright? So I'm going to go back and look at a different one. I'm going to put in, can everybody hear me? Because I'm not getting any interaction. 160 and 59. 1.60 is the bid. This is a $35 strike, .59. Okay. Okay. So in this trade, I could come out on top of the trade 69 cents if I sell this call. Now remember, when I sell the call, I'm going to be down 61 cents. I'm already going to be in the hole. And so I'm only going to do this instead of a stop. And this is a really good strategy in retirement accounts. Now, pulling up the chart, I want to look at where 35 is. And I'm going to bring my cursor right down there. It's 35. I'm hedged. I'll be hedged down to 35.60 because I'm going to have 60 cents in premium. 34.40. If it goes below 34.40, I will have lost money on this trade. So what I did is I will have protected myself down to 34.40 by selling what's called a protected call. It's an in-the-money call. Okay? So by doing that, I'm going to go back in here and I'm going to execute this trade. I'll do like 3 or 4 of these. This is a NASDAQ trade. Now, before I do that, this is a paper trade. I don't use Thinkorswim. This is a broker. So one of my friends showed it to me, Dick. So I'm going to bring this up and I'm going to show you something. This is, let me show you this trade. Okay, this is called a risk graph. In Thinkorswim, if you bought 100 shares of stock, immediately you'd make money, immediately you'd lose money. Who is unfamiliar with that risk graph? Okay, I'll assume everybody's familiar with it. If I sold it at my target, I'd make $270 on 100 shares. If, though, instead of selling it at my target, oh, you're not familiar with a risk graph. Yes, Krista, you are, or no, Krista, you're not. Let's wait for her to respond. Risk graph. G, put a G-R-A-F-T. Okay, let's back up then a step. Okay. A risk graph just basically says if you bought the stock, the bottom is your x-axis and the side is how much profit or loss you've made. You'd immediately lose money going below this price. Below 34, you'd be down $175. At 38, you'd be up $219. Okay? So a risk graph just basically shows you whether you'd make or lose money. If you take a component of your trade, like, and you said, I sold my stock at $38.50, I'd make $270. Okay? If, though, I didn't sell my stock, and instead of stopping out, I sold an in-the-money call, and I took this out to expiration. Let me bring this out to expiration. Okay? At expiration, I want to show you this. Does everybody see where my cursor is? I could sell that call and protect myself where I would lose no money down to 34. Okay? It's really important, and that's 2.5 weeks away. Not even 2.5 weeks away. I'd protect myself all the way down to 34. Alright? So being protected down to 34, I lost your voice, so I have no idea. To protect myself down to 34, I want to see what that looked like on the chart. On the chart, there's an indicator that says break even, and I can put in, it's actually 34.40 is what the number is. Okay, what this shows me is that if I go below that line, I will start to lose money. But that line's in a wonderful place. What's that line sitting right on? It's sitting on support and the 200 moving average. So if this trade goes below this point down here in the 5-minute chart, I'm going to sell a in-the-money call to protect myself down to that price. All right? So what I've done is I basically made it so I'm not losing money all the way down to 34.40. I won't lose any money. I only did that. You see how this line kind of curves like this? The yellow goes flat. I hope everybody notices the yellow goes flat right here. That means I can't make any more than that much money. I can't make any more money on that. None. But if I never had to do that, I'd make this amount of money, 270 bucks. So basically, I've modified the trade to make some money, to protect myself to the downside. So with that being said, I'll show you. I am long. Let's go over here to Untitled page. Let's go to ticker, NDAQ. Okay. Let's wait for just a second. For some reason I lost my connection. I'm going to bring it back up. Wait for the to bring back up the broker so I could show it to you. I'm basically long that very trade. Okay, tomorrow if it goes below there, I'll sell a call in the money. Okay, does that make sense? Any questions on that concept? No, in IB it's going to be a little bit different. That's what I was trying to bring up. IB it's just a little bit different. For some reason it's giving me fits right now. They may be going through an update. It's not logging in at the moment. No, IBD you have to do it different. It's 2 tickets. In Interact, every broker except for Thinkorswim, every one of them, that's a 2-part trade, meaning you have to get into the trade and then place the sell limit, which is your target, and the stop loss, which is your sell the in-the-money call. It's a 2-part trade. You can't do it any other place in one spot. Okay. I wanted this thing to come up. Maybe it's not good. All right. I'm going to close this. I'm going to look at another trade in the same sector. Now, this one, I got whooped on today. It's US. I'm up. This morning, I bought long Gilead, 1,000 shares. I bought Gilead, Amgen, and it's another one in that. Genzyme. They were both up. When the market hit its 20 MA, I liquidated those trades for about a $1,500 profit this morning. Okay, within 10 minutes. Within 10 minutes. Well, I was looking for stocks that hadn't moved yet, that didn't jump like those did, and I got back into NYX. I'd been in it and out of it. I had been in it earlier in the week for a profit, and I'd gotten back out of it, and I got into it again and got whipped. Let me show you this, and I'll show you what I did. And if I can get the interactive brokers to come up, not both brokers seem to want to come up, I'll show you what happened. Okay, basically in NYX, we can see that it's pulled back to an intermediate kind of bullish position for us to take. Here's some intermediate trend lines. Okay, it broke those intermediate trend lines today, but it's come right down by this support level. And so for an intermediate level trader, as long as I stay above these two moving averages, and I'm above, it's actually looks at about a 60% retracement. As long as I stay above that, I could be bullish. Okay? Now, here's the 60% retracement. Hold on just a second. Okay. There's a little bit farther to go to the 60% retracement, which is around $60, but in between 38.2 and 60% is a bull pullback zone. So I went fishing on the intraday chart, and what this intraday chart did this morning is this is where it was. I got triggered in yesterday. I got above these MAs, and I had bought some of it yesterday, some more, and I had bought some on Monday. I've actually used a different technique. I bought on Monday, and I sold someplace up in here for $1,000 gain. But I wanted to load the boat, so I bought 1,300 shares on this breakout. And this morning, it looked like it could keep going. It started to break out, and it immediately reversed right out of the chutes. Well, I had a thing to sell, a protective call right in here. So I sold a protective call. That dropped right in there because the options weren't decaying very much. Netted me like $500. So I was down altogether on the stock about $1,500 minus the $500 I bought in, so about $1,000. And then it started to run back up, and I'm still holding it. But in aftermarket trading, it dropped another buck. So I'm down on that like $3,000, which took all my gains from this morning. Because when it came down here, I pulled my hedge off. I bought back my calls in profit. Now, I wanted to show you one thing that happened on this and then go work up a trade for you guys on this very same stock. I want to bring up some volume. There's a very, very interesting point on this that's happened. Well, I'll show you why I bought it back. I regret it now, but I'll show you why I bought it back. I'll show you exactly why I bought it back. Okay? First off, the distance between breakdowns was definitely narrowing. I mean, here's a breakdown, and I mean, we're coming into a really narrow spot. It's been dropping, and to me, it looked like it slowed down. That was a big drop, pretty good sized drop, and then an up move. We've dropped here, and we possibly have another low that's forming down here. Now, I want to show you something on the daily chart. This is kind of important. Daily chart. All right. You guys see this volume spike? Can everybody see the volume spike? It was almost double normal volume today. Isn't that bad to have double normal volume on a down day? Who would agree that it's bad news to have double normal volume on a down day? Here's what I mean by double normal volume. Nope, it's not. Let me show you something. It depends. It depends, but I'm tricking you. So let me finish tricking you. What you do, I'm going to go back on this last couple swings, and I'm going to take some stuff off here so you can see it better. Volume, to me, can only be discerned, this is my own opinion, can only be discerned the bar after the event occurs. Okay? So let's find this volume event. That's a big volume event. You can't see it. I'll put it just right after it. Okay? There was a huge volume event and then down move. Okay? There was a volume event here and a down move. Okay? Now, there was a volume event here and a down move. Alright? So there was a down move right in here. So every time those volume events happened, there was a down move. Now, what happened with our volume today? There was a volume event there and an up move. Then there started to be at the close, volume just poured in the last hour. What happened with the last couple pivots the last hour? We started getting a higher pivot high. This is why I took off my hedge right in here. I got a higher pivot high, and it's a semi-triangle with huge volume increase with a big volume increase. And that volume increase, at the close, all this volume was building to the upside. So I didn't want to be hedged on the way up to make back the money that I was already down. Remember, I was down about $1,500 minus the $500 I won on the option. Well, in aftermarket, this thing went down below 62. Okay, and I have 1,300 shares, so that put my loss at 3,200 minus the 500. Which, if I count everything I did today, it looks like I was down $400 for the day, unless this thing comes ripping back. The profitable positions I closed totaled up to, they totaled up to right around $3,000, and this thing was down now to 3,500 when I looked at it. All right, so Krista, that's why I took off my hedge. A higher swing low, increasing volume on a possible forming support. The last 5 minutes sometimes is not the time to turn off your hedge. And I knew that, and I took it off anyways because I was fairly confident in it. So I pulled my hedge off. All right? Here is pending orders. That doesn't look at it. Okay. So I pulled that hedge off this particular position. But let's work up an order on it right now. Okay, I'm going to pick on either Krista, Dick, or Kerwin, one of the two. Where would you guys buy it? I'm going to say, I'll give you some hints. This will be point A. You can buy it dropping to point A. You can buy it crossing above point B or crossing above point C. Where would you buy it? For tomorrow. I know why that thing screwed up now. 63.25. See what that is. That's a good one, Dick. I agree with that. What's the ATR on the stock and how much movement's left? What's the ATR on the stock? So do the ATR and distance to entry. What he's going to compute is he's going to take the closing price, which is 62.87, minus his 63.25. 63.25 minus 62.87. 62.87. Minus those two numbers are going to give me, why did that come up? Did everybody get that number? I typed it in and it didn't show up. Okay, it is 62.87. 63.25 minus 62.87. There. Okay, what's the difference between those two? Somebody tell me. 38 cents. Okay, that's not a bad entry. The ATR on this, let's see what this is. Let's find the ATR. Now remember, this is a 3-month trade. I'm looking to hold this for up to 3 months. That's a long time for me, but I'll keep hedging away the risk and build a position down by this support level. It's a possibility because this thing should run quite a long ways. Okay, let's look for ATR breakeven. Okay, it moves 269 a day. Okay, 269. I think that if I just look at this, that's the longest term I want to hold it. February and March, we're getting a 2-month pullback. Might get a 2 to 3 month run and retest 90. Yeah, because of the previous pattern. So it moves 269 a day. For Dick to give up 38 cents, it's no big deal. He's going to enter it going up. All right, so let's look at this intraday. This is exactly what I've been teaching you guys in that class. So let's take our entry price of, where did he say, 63.25. Let's find a stopping price now. Let's say if it goes below this low right here. That's 62.29. 62.29. And the current price of it is 62.87. Now we're going to go in, and I was showing you this broker Thinkorswim. We're going to go back to trade, and we're going to do NYX. We're going to click ask, bid, and we're going to say 90 is our long-term target. We're going to buy it. We're going to put in a buy stop limit. We're going to buy this thing at 63.25. See, look, it's 63.25. 63.20. Sorry, I was pausing. 63.25, and right now it's at 62.19. Oh, that's why I was confused. Okay, and we're going to put in 63. 10% of the ATR would be about 30 cents. So 30, we'll say 63.55. That's the range I'm willing to buy it in. Now let's put in an option. Let's pick an option. Let's try to sell the $60 call. Okay, and we're just going to look at this. We're going to put this in as a good tough cancel. And we want to see this. If we can get the $60 call is going for $4 and it has a delta of 71 cents. Okay, it's $4, $60 call, 71 cent delta. Now remember, this is 2 weeks to expiration. You could come out of this, if you put this order in, you could take a $1 stop and still come out of this 34 cents profitable in 2 weeks. Because let me show you what I mean by that. I'm going to bring this up on the daily chart. I'm going to bring up this indicator that says break even. I'm going to put on $60. Who thinks that thing goes below $60 in the next 2 weeks? Any comments? One never knows. Dick, that is so true. So that's why you hedge away your risk. One never knows. So if it goes down there, we're going to hedge off the risk. And just to show you this, I'm going to apply my default template. Apply template. Let's put in default here. That means I don't have enough data to calculate one of my indicators. Break even's at 60. Okay, who's totally lost? Let's come to all the class. Who's totally lost? Yeah, it could. Oh, definitely, Kerwin, it could. It could. It's right down there at 60. But it's in a bull pullback, and this is a weekly pattern right there. I'm going to pull up the daily pattern right now. Okay, here's the daily pattern on it. Okay, there's $60. There's all kinds of support down there at $60. There's previous resistances laid in there pretty tight. Okay? But yeah, it could. It's dropped a long ways, but we'll hedge it. Do not have data right of March. That means you probably didn't download your data or something screwed up. I have no idea. Okay, look. So, is everybody comfortable with selling this? Let's analyze it. Okay? If we do this one on NYX, and we say we're going to buy the stock, that's our risk graph. Hopefully everybody can see that. This is if I sell the stock, I'll have a $2,000 profit just on 100 shares. This is if I marry it, I'm hedged all the way down to $60. A little bit below 60 because I get some premium in there. Because I'm actually would have 59 cents in profit, so I actually hedged clear down to 59. All right? Who does not understand that we just sold off our risk? Now, there's a couple things I want to talk to you about this. Look, the idea of selling your risk is you're hedging yourself to the next support level. Does that make sense? Anybody have any questions? Hedging yourself to the next support level. Well, ask away. I can't hear you speaking, James. Major support always. No, not major support always. I'll show you a different one. Okay, show me another example. All right. Okay, let's go find another example on this. All right. Get down left on me. All right. Let's go find another example. Another example would be, let's run a scan. Let's just use Metastock and run a scan. Let's go bull pullback. Let's take this one, bull pullback. I don't usually use this computer. I couldn't get the Thinkorswim to work on my other computer. And so, let's do the Free Filter Explorer. Do I always use it? No. It's probably not a good one, but it's for the, like a bull pull, stats are against us. I don't understand what you mean. Use a bull pullback if the NASDAQ against us. Last week you said. Oh, I misspoke. No. If I said that, JR, I misspoke. And they recorded it. Somebody's going to hate me for that. No, I think what I was trying to say is that the uptrend, shorting is against, like, somebody asked me if I was shorting, and I was trying to articulate that bullish stocks constantly get put into the indexes. Since the indexes tend to run, 90% of the time people tend to want to be long. Shorting, I would say, in my opinion, that there are more long opportunities than short opportunities. Okay? I don't know why I think that. I gotta think that through, but, all I meant is that it's statistically probably not the soundest to short the indexes when you're beginning. Most people should trade bull pullbacks. Yeah, I think that's what I was saying. Anyways, I was probably having a long day. Alright, let's run this scan. If I said that I misspoke, you can stomp a mud hole in me later. It's hard to keep everything straight in your head. I'm going to do it on healthcare. I'm actually going to do this on the biotech stocks because the healthcare sector has been crushed. A lot of them that I'm trading, Amgen, Gilead, Genzyme, they're all looked on. And some of the other sectors look really toppy to me, so I didn't want to get into those. Okay, this is going to run a little scan. Any questions while the scan runs? No questions on any of the concepts? I'm just running a scan for a bull pullback in the biotech sector because I know the healthcare sector's been pretty well beat up. And if the market is to continue to rally, I don't want to be in one of those sectors that took off today. I was late to the party. So if I want to trade something, I'm actually been looking at full put spreads on BDH stick. This is I'm getting ready to put some of these on possibly tomorrow. It's a biotech holder, and last year about this time it was down on its lows too, and took off, if I remember right. Rejected, there's only 10% that are in a bull pullback. About an appropriate time to buy back the call. Oh, that's kind of your risk, isn't it? Well, you shouldn't talk to me today. That thing gapped down after market. Well, it's after market trades. There was only like 3 trades down there, a buck lower. Didn't make me very comfortable. Tells me it'll probably drop and run. I'll just buy some more and re-hedge it tomorrow. Not that I wanted to. Okay, 13 stocks came up in my pre-filter out of the 100 or something. I'll show you I'll answer your question in a second, Krista. Okay, let's go back up here to bull pull or resistance expanding report. These are the stocks in the biotech sector with resistance expanding. This one, that's a $1 stock. We're going to skip it. The only one I see that I like right there is this one right off the top of my head. Move. Scalping bull. Let's look at our resistance points to see if resistance is expanding. We're going to score this chart up. Okay, it broke out. Was the difference between resistance and resistance, was the momentum expanding, yes or no? Yes, okay, so it's probably a good bull pullback. So let's look at the chart. Well, big earnings came out 3 days ago. How do I tell, JR, were you here last week? How do I tell if it's slowing down? NBS. How do I tell if it's slowing down? Ah, nice. Well, it's in a good bull pullback, but they took some profits on that pretty quick. There were some people that ran up and got a intraday. That looks pretty good. Well, okay, where would you buy it? That must have been the spike this morning. If you were going to buy this, where would you buy it? And I took the pivots off for a reason. If you were going to buy it, where are you going to buy that? Somebody tell me where they buy it. I'll put the pivots back on. It might make it easier. I gave you a big hint. Okay, we want to buy it above 1, 2, 3, 4 resistance points. It's a nice breakout. Yeah. Okay. 57.10. It's a nice ascending triangle. I think I'll trade this tomorrow. Okay. It's a nice ascending triangle like this. Okay. We're going to want to buy it above here. Let's convert it. Let's see if we can convert it down here. That is somebody write down this number, 5689. 5689. Let's see if this works. Let's go back and get the symbol. It's NVS. Back to trade. NVS. Okay. We're going to buy it. We're going to hit the buy. We'll sell it. We'll sell an option if we can get away with it. Now, we're going to buy this with a buy stop limit. We're going to come in here. We don't want market. We want stop limit. Okay, we said we were going to buy it at 57.10. I'll bet you. I didn't get the HR. I'll go back and get it. 57.10. 57.10. Okay, the ATR on this. We need the day chart. This is my development PC we're on tonight. It's got a bunch of indicators I develop on. 83 cents. So let's go 10. Close enough. We'll say 10 more cents. So 57.16. Let's go 20. Let's put our target in. Let's find our target. If we're going to build a bird food, let's get greedy. Let's go above 59. Okay. 59. And now let's see where we can put our stop in. Okay. Let's see if this thing will work to figure out our stop. Okay. We're going to go in and say 57.10. We're going to put our stop at 56.89. I got to go see the price we were at. The price it's trading at is 56.01. 6.01. We need the bid and ask of the option. 220 with a delta of 77. Oh, I didn't see the strike price on that. It was probably the 55. Okay, that is a, well, we can't enter lower than the stop. What was I thinking? 57.10. That's only about a 20-cent stop. We might loosen that up because, well, that's still good. That gives a 6-cent loss on that one. That's only 2 weeks of time. Okay, we'd be hedged down to 55. So let's see where 55 is on the chart. Does anybody think it's going below 55? See, we can offset our risk clear to 55 using that one, but we lose 6 cents. Sometimes I'll still be willing to do that. It's 2 weeks expiration, and I can put a dollar stop in and lose 6 cents. Who finds that appealing? Yeah. Now a dollar stop in and only lose 6 cents. I mean, that's a pretty good one, and it's got the virtue one. Why not try that one? Let's analyze this, see what it looks like. We're going to look at it without our limit in there. Oh, 10. Look, I got to change this. I wonder why it looked funny. We're protected all the way down to 55. Okay? By doing that trade. Are you guys comfortable with this concept now? It looks like some people haven't been here before. Like I've never seen Tango or Scott C that I can remember. Maybe I'm just going crazy, or Debbie. I know Charlie's been here every week. Krista has. Does this make sense? Yeah, that's why you want to sell a call if it goes against you. Oh, the cost, yeah, Thinkorswim's a little hard. The order makes sense. I'm working on the, well, you know, Thinkorswim, this risk graph here is pretty nice, and they allow you to put it on one ticket. So it's really cool to put that order on one ticket because you don't have to stress about it. And like today, I had so many amounts I could have hedged a lot sooner, but I didn't get a chance to get it done because I didn't have the pending order on my NYX. All right? So if that makes sense, let's move on to maybe another little topic. I wanted to talk to you about different instruments you could trade. Has anybody used any of those the scans that I made? Have any of you on there ran the scans? Kelly has them. I don't. Krista maybe could tell you how she got them. I didn't give them to her. I know Dick's ran them. JR, have you ran any of those scans? Kelly has those scans someplace. I don't know where they got them from. Yeah, I'm not sure. Kelly, you'll have to email Kelly. Okay, now, those scans have a problem in them. Guess what price what's the average price of the stocks that come up? Does anybody know? Before I get into that, I'm going to recap real quick. Who wasn't here for the last few classes? Because I'm going to recap this real fast. And then I'm going to move on to a different subject. Yeah, Chris, you're on. It's about 60. Okay, here's what we learned. We learned to identify trades. We learned missed most of the classes. They haven't recorded, Scott. One of the things that we worked on were 3 axioms of trading. That support is an upward movement in price. That a trend is the failure of support or resistance. That momentum can be expressed as the difference between pivots. Okay, so you got most of them, cut those. Okay. So you understand the difference between support or resistance and resistance can be an expression of momentum. So you got all those points. Then what we did is we said, okay, we're going to find trades, we're going to rank them. We're just going to find trades that match our volatility, and we're going to look for a pattern called a bull pullback, and then we're going to rank those scans. Okay, we're going to say those scans are scans that could, well, we'll come up with just a list of stocks that match our volatility. Then after we did that, we looked for high implied volatility over historical volatility so that we could sell our way out of a problem. And that's what we've been working on is the money management section. We trigger in using axiom number 2 and number 1. We trigger in as it starts to move up. The way we manage our trade is we sell in the money calls, and our targets are based on sometimes on our need and time frame that the date and range give us. So, and what maybe the overall market's doing. But one of the problems is exactly what Krista said. You're coming up with $60 stocks. Who's uncomfortable buying $60 stocks? James, I can't hear you speak when you do it. You have to type. Okay. One of the things that we can do is introduce you to some concepts tonight that who has zero or very little options experience. Yeah, I can't hear you speak when you speak, James. But if you have very little options experience, okay. Can you see how important this option stuff is that I'm showing you? Anybody disagree that they could become successful stock traders without understanding the concepts of options? Do you feel like you can? I totally feel like people cannot become successful stock traders without understanding options, because what hedge fund managers do is they sell the risk to somebody else. Well, you kind of have to understand how to sell the risk to somebody else. I taught you one technique, just one, okay? And that technique is to sell an in-the-money call and get our money back, all right? But there are all kinds of possibilities of things we can do. Who is familiar with a high delta option? If I trade options, yeah. If you start out with options, JR, is that what you're asking? Let's go through this. I'm going to bring something up. I think I gave this all to Kelly. Yeah, let's talk about this. I prefer to start out with stock, but hey, it's your life. I'll show you. You're asking me hedge away the risk. The proper way to say that is, Jeff, how do I hedge away the risk if I'm using an in-the-money option? Let's see if this is the one I want. This is my development PC, so it doesn't get updated a lot. But Thinkorswim was giving me a hard time. Okay. Give me just a second. There's just some trait people have helped over the years. Let's see. Let's just try to find one. Let's copy out of Searles. This is a guy from Canada I was helping out. But this is some stuff I traded in. Let's bring up, this one doesn't have in it what I need. Okay, give me a second. Let me find this real fast. A little ill-prepared on this because to get the Thinkorswim to switch, to fix, I had to switch PCs. And I wonder if I could log in twice because I showed you everything I need to in Thinkorswim. I'm going to log out for 30 seconds. I'm going to switch PCs that has the other stuff on it I need because you guys don't need any more Thinkorswim stuff. So I'll go be right back.
I don't know how come that is, but that's why. All right. Let's talk about something. Instruments. Trading an instrument. This is what I'm going to cover for the last hour here. What's called a debit spread means that you're buying something that costs you money. Okay? So if I buy a stock, the problem with it is it's a large capital requirement. Now this is exactly what I want to look for on a stock. Okay, I want to rank it, I want to look for a bull pullback, I want all those things. Now, let's look at a different instrument and talk about it. Does anybody know what a high delta option is? High delta option. Deep in the money. Yeah? No. Okay. Do you know what a delta is, Tango? Do you know what a delta is? James, do you know what delta is? Oh. Okay. Here's an easy way to remember delta, and I've told this story 100 times, but it's a true story. Remember when that Cubs fan caught the infield fly and he was going to be beat? Well, I wanted to see the highlights of that, and I turned on the TV and there was a tango dance competition. And I lost, and my wife got to win and watch the tango dance competition. Tango dancers score from 0 to 10, and they're perfectly correlated at 10. At 0.20, they're horribly correlated. Horrible. So you would never watch someone with a score of 0.2. You'd look for a score of 1. Then they're really fun to watch. Well, during this tango dance competition, I had an epiphany about option trading. Option trading works like this. If you have a delta of 1, the stock acts like, or the option acts like a stock. If you have a delta of 0.20, the option doesn't act like a stock. Options are the rights to purchase a stock, but not the obligation to purchase it at a specific price. So if I have a high delta option, if I have a delta of 1, the option would respond dollar for dollar with the stock movement. Okay? So if I trade a deep in the money option, I can trade a $50 stock without putting up the money for it. I could literally put up 10% of that. So 10% of 50 would be, 50 cents. I could put up as little as $500 to trade a option that acts like a stock. What's the apostrophe for, Krista? Yeah, $5. Exactly. Or $5, sorry. Sorry, Dick. Okay, I got my zeros mixed up because I was thinking $5 option. You know what I did. Alright. So, what we can do is we can trade these high delta options, which makes this thing act just like a stock. And that's what one of you was trading that asked me about. I can't remember which one of you it was. Was it Scott or John? Was trading a high delta option, and they wanted to know how to offset the risk. Okay? Now, if I come down here, there's covered calls you can trade. There's bull call spreads. There's lots of strategies. There's one I call double down. These are tear sheets of my trades. Credit spreads. I like bull put spreads. These are fun to trade. There's two ways to trade them, delta and theta plays. What happens is, if you don't have any money and you want to trade a stock, you can buy in the money options. Now, there's a problem with these options. I need to bring up something and articulate something to you. For the option traders in here, they're going to like what I'm showing you. For the non-option traders, you're not going to understand this really. Start of it, you will. Benchmark. Okay? We're going to say that I have 100 shares of stock, ATR of 1, ATR equals 1, or potential profit equals $1. Okay? Oh, I wasn't even looking. Oh. I could trade, but spelling, well, I can't. Okay, potential profit of $100. Okay. Now, if I'm going to trade this, if I'm going to trade a stock, what are my costs of trading stock, Dick? Yeah, the spread. So at Thinkorswim it's $5 or 100 for $5 in, $5 out at Thinkorswim. So the spread, and then we have trading range cost. The trading range cost equals how much we had to give up to know support is support. Okay? So the commission in, commission out at Thinkorswim is 5 plus 5, and the spread is $1 per 100. Okay? So the total cost for trading our stock is going to be $11, $11, or 11% of my potential profit on the day. All right? Now, if I'm going to trade a high delta option, who's the high delta option trader? Which one of you? I'm going to trade a high delta option. My cost is commission in. How much is it at Thinkorswim, Dick? So you can make me commission in, commission out. We have the spread, and then we have delta cost and theta cost. $3. Oh, it's a little cheaper. Nice. 3 plus 3 plus 1 for 100. Delta cost. If we get an option with a delta of 75 cents or greater, it will act like a stock 75%. So if a stock runs $1, the option will increase 75 cents. Okay? The theta cost is $1 per 100 per day. Okay? So the total cost on trading our option, and I know this is a brief overview of options, and I'm going really fast. We're looking at 3 plus 3 is $4, or 6, $7, $8, $8. Oh, we forgot the spread. The spread's not $1 in options. It's 25 cents. So 25. So it's 25 plus 6, 31, $32, 32 times 25%. Because my costs are 25% greater. Okay? So we're looking at about over $40 in cost, $40, about $40, okay? That total cost is 40% of my potential profit. Now, I want to show you something, just to give you an idea of this. There are ways you can make money with options, so don't take this the wrong way, but options were designed to sell. And I'm going to walk you through an example of something on a stock chart. And then we're going to get into a couple more things. Who's familiar with foreign currencies and single stock futures? Either any of them in there. SSFs, okay. Krista, how about you? Are you familiar with SSFs? Who's familiar with currencies? Or the Forex, haven't worked with them. Okay. I'm bringing up the chart right now. Alright. I'm just going to take, for example, a high delta NYX option. Let's do NASDAQ, let's do NYX. If you are going to buy NYX, give me a high delta June option on NYX, just the strike price and the cost, because I don't have Thinkorswim won't run on this one. Okay, for some reason it's screwed up. If I bought a stock, I want to show you guys what I started to get into. If I bought a stock, and it went up 1 penny, I would make money. Agreed? That's what that line represents. If I bought NYX, it would actually be, we determined it would be $6, $7 higher. So it's actually 7 cents higher than that. But pretty much 7 cents higher, you make money. Everybody agree? Because our cost was 7 cents. Anybody disagree with that? Okay, tell me that high delta option on Thinkorswim. Otherwise, I'll jump back over to the other PC and just look. I won't disconnect. Okay, I'll grab it. Let me look. NYX. Here, I'll jump over here. NYX. Okay, NYX, we'll look at June. The June one with a pretty decent delta. 86-cent delta is going to cost me $870. $870. Okay. 870 per share. 87-cent delta. Alright, for you who don't understand options, watch this. That is, what strike price is that? That thing is the 63.30. Breakeven is 63.30. Okay. Without, oh, I got to put in my costs, which were about $40 higher. 63.70. Okay. If I was to buy a high delta option, well, first off, if I was to buy NYX, NYX is going to cost me to buy about $62 a share on the open. Okay? $6,200. If I was to buy a high delta option, I could buy it for $870. Which is more appealing, $870 or $6,200? If the stock moves $1, if NYX moves up $1, I would get $89 per 100. Okay, if I own the stock, I'll get $100. Okay, but the problem is, because of those lines on my chart, I don't know if you guys can see my chart over here, but it's easier to make money on the stock because it costs less to trade. Does that make sense? It has a higher capital requirement. It costs $6,200 to buy it, but actually the fees that are associated with it, like your the spread and the delta and theta, it costs you more to trade the option. So you have to be a better chartist to trade the option. So there's kind of a trade-off here. There's a little trade-off. We're saying, well, it's very expensive to run Jeff scans and find $60 stocks. I'm not sure I want to trade a $60 stock, so maybe I'm going to trade the option on a $60 stock. If I trade the option on a $60 stock, maybe it's more expensive. So something just right in the middle, in between stock and options, is an instrument called a single stock future, SSF. www.onechicago. Yeah, I'm not typing tonight. OneChicago.com. Okay. Now what they have is they have no delta, no theta. That means they act just like a stock, and you have to put up 20% of the value of the stock. You could trade the stock for just putting up 20%. Who has under $25,000 in their trading account? Okay, if you have under $25,000 in your trading account, then trading a single stock future is very appealing because, do you know that day trading rule? Who's bumped into the day trading rule? Neither one of you? Wow. Okay. If you have the, not to trade, yeah, you borrowed from trading. The single stock futures don't bar you from trading. The single stock futures are just like an option. One of the things here, look, let me just pause for a second. Well, I assume all of you guys have been to 90% of those meetings. You can see that I'm going down a path that maybe you don't have any basis to understand. A single stock future, selling in the money calls, how do we offset our risk? Who kind of feels that way? Who kind of feels that I'm taking you down a path that right now that may not be useful? Well, I think this is my assessment of the class. I'm going to state something. I want to see if this is right. You see there's some use in that, but you're kind of concerned that you may not be able to implement some of the stuff I'm showing you, and you may not have an understanding of it. Is that kind of my assessment of how most of you feel? Okay, how about the rest of you? I just see Krista's. Okay. Okay, yeah, I'm going to give you some more on SSF, John. Just a second. Yeah, you got it, Kerwin. Dick's got it. I understand. For some of you who don't get it, the reason Kerwin and Dick have nailed this down just a little bit is I've spent a lot of time with them individually on a lot of trading concepts. I don't know how well they're trading right now, and they don't need to comment. I make money several different ways. I make money managing a hedge fund, which is probably about a third of my income. I make, I'd say, 10-15% of my income on foreign currencies. That's trading outside the hedge fund. I make money teaching people how to trade, and I make money writing some things for Metastock sometimes. So CDS from Britain are trying to I don't know what it's CDF. It's not ringing a bell right now. I had a long day trading. Here's the point. If some of you want, you can call Kelly, okay? And this isn't a sales pitch. Call Kelly at 801-270-3144. He can hook you up with a class that you can come to Salt Lake, spend 3 days trading with me, and looking at some stuff about Metastock. Some of the main points are in here, but it's gone over in a lot more detail. Hedging away risk is one. Again, using mostly a review of some instruments that you can trade. But if you're interested, you can talk to Kelly about that, all right? Let's see, CDS from Britain are trying to establish in Canada now for much lower margin requirements. Yeah, that's cool, Scott. I wish they would, though, what we need is cross-marginability. Cross-marginability, okay? If I jump to single stock futures, there's some information. Look, well, I'm on two conversations. First off, if you want some more information about trading, and you need somebody to sit down and trade with you, fine. If you can pick it up for free, all your trading stuff, I go into seminars. Hey, do it. I've been to tons of seminars. I picked up lots of information from people. So it's up to you if you want me to sit down and help you. Now, second thing, single stock futures. Single stock futures are identical to a high delta option, except for in a couple ways. One way is this. Single stock futures, you have the obligation to deliver the stock or buy the stock at a specific price at a specific time. They have no delta, no theta. The delta is 1. This is for some of you that are understanding this, okay? They're a very good instrument to trade. You can scan for them in Metastock, which is very appealing. You can scan for single stock future setups. Second, okay, you can trade a high delta option. High delta options have the right but not the obligation to purchase something. So, since you're obligated with single stock futures, you can lose more than you put up. Okay, that's very unappealing. You can lose more than you put up. With an option, you cannot lose more than the 870 you put up. That's the most you can lose on a trade. That's kind of appealing to some people. So there are different instruments available to you to look at. Now, I'm going to give you a couple places to find some information, cboe.com. You can go to the Learning Center there. That will teach you about options, a basic overview. You can go to one. Yeah, I was fast. Well, I was panicked. I was trying to fix as fast as I could. Anyways, the router just hiccuped and came back on. So I called Kelly and told him to call you. First off, single stock futures are pretty basic. It's just identical to trading a stock. Except you have to make sure you're out of them at the end of the expiration unless you want to buy the stock. Okay? So there's single stock futures, high delta options, and stock that you can buy. Now, I taught you a hedging mechanism that will work on single stock futures, but some margin requirements are there. The second thing I taught you was how to hedge with high delta options, how to hedge away your stock position. Then let's talk about the first thing then. Or the question that someone had for me. The question that you had was, how do you hedge away the risk of a long call position? That means that someone bought a long call. How do you bail on the risk? Well, I think it was John that asked that. I think, was that you, John, that you wanted to know how to hedge away the risk of a long call? Oh, it's JR. Okay. One of the ways on options, you buy a high delta option that acts like a stock. That's basically the moral of the story. If you don't know what I'm talking about, you just bought this other instrument from another exchange that acts like a stock. How do you offset the risk to that? There's a couple different ways you can do it. Number one, you would short the stock. Okay. Basically, what that does is lock in your loss, though. Depending on the size. So the only way to really fix a high delta option, you could short the stock at the rate of delta, so you don't lose any more on the way down. That means that if you have a delta of 75 cents, you short 75 shares of stock. That sets you to delta neutral while you try to figure out what the market's doing. And if it drops more, you're making money on your option or on your stock, but not on your option. Okay? That's a good way to do it. You'll make a little bit back. It sets it kind of to delta neutral. You don't want to fully hedge it though, because if it runs up, you would start to lose money on the short stock. You would anyways. But the idea is that you're going to capture something called a delta inequality. And I probably have to just sit down and explain it to you in person, JR. The difference between if you have a delta of 75 cents and you have a delta of 75 cents on your 75 shares short, and the stock rises $1 in value, this thing kicks in called gamma, raises your delta. Now you have a delta of 89 cents. You're losing 75 cents on the dollar in the stock, but you're gaining 89 cents on your option. So the best thing to do is to short at the rate of delta whenever it starts to drop below your strike price. And that delta inequality works to your advantage. If it drops $2, the option will lose maybe 75 cents on the dollar the first drop, and maybe 60 cents on the dollar the next drop, but you make 175 or 75 cents on the dollar each drop. So that's kind of complicated. Some of you don't even know what I just said, but I'm going to ask JR if that made sense. Did that make sense to you, JR? You short at the rate of delta, the delta inequalities will go your way because of the way the option acts. Yes, no, maybe. Yeah, you understand that? If you understood that, you have a high degree of understanding on the option. The options, well, no, you said it backwards. Sort of. Your option is, if you're long a call, you short the stock. But the stock is a fixed amount of delta, whereas the option is a fluctuating delta. And the delta will fluctuate in your favor on the way up and fluctuate in your favor on the way down. Both ways. You just need a large move to recapture your money either way. But if you shorted that, the worst thing that can happen to it, so like the way it works in this, the worst thing that can happen to JR in this situation is the stock goes flat. If it runs 10 points up, he's going to recover his money. If it runs 10 points down, he's going to recover his money. As long as he gets a large move and it doesn't stay flat, he's fine. If he stays flat, he's none worse the wear. He lost a certain amount of money and he's none worse. He's flat the position, locked in his loss, and c'est la vie. Okay? Any questions on, well, I know some of you'll have questions on that. That's kind of complicated. Alright, does everybody understand that? So what I'd like to do is just kind of take some questions from you. There's several different instruments. Let me recap. I'm going to summarize all the classes real fast. Our trade identification has two unique things in it. We need resistance expanding, which means it acts like a MACD. Well, what the guy who designed MACD was trying to do. He looks for increasing momentum on the daily, decreasing momentum on the 5. We enter intraday above resistance because it's better than doing it with an indicator, because the indicators are slow, they work off a price. We use some basic trade identification scoring systems. We can score anything we want. We have 4 patterns, a breakout, breakout, breakdown. We basically have a trade management section where we try to sell deep in the money calls to recover our money. We hedge our risk away at the rate of delta. We trigger in intraday, so we got that. The next thing that we have is the position of the last 4 pivots. We covered that. One of the other things that we covered was which instruments to use. You can use high delta options or single stock futures. I like single stock futures better. If you can trade stock, it's easier. So, with that being said, there's a plethora of ways that you can take your own education. What I wanted to do is build you a foundation of technical analysis and how to use Metastock. Do any of you have any questions on that? What happened? I have no idea what just happened. Hey, Devin, can you still hear me? Yeah, you are. Was that just so unfair? That's kind of overkill. Yeah, that's exactly what I asked. Exactly. Oh, Forex. Sorry, I forgot about that. Thought I was going to show you the very last thing. Yeah, I said I'd show you some Forex. That fits a lot of your lifestyles. Yeah, I forgot all about that. Okay, foreign currencies trade 24 by 6. And the way they work is this. You can put up $100 and trade the foreign currency, all right? And $100 gets you $10,000. Let's maybe even take some trades on that. Open. Let's go to Forex. Okay, these are going to be some patterns. I'm going to have to make them big. These are foreign currencies. This is a British pound. And I trade I have like 4 systems I trade on these. And I like to trade them at night, and they work on our axioms. I'll teach you a really simple one. This is a breakdown. If it breaks below the bottom channel, it makes you think, oh, get ready. There may be a short, because axiom number 1, or axiom number 2 says a trend is your friend. And if you break support, a trend is developing. Okay, if it crosses above the top of the channel, this is one of the other things I mechanically trade. Cross above the top of the channel, that's my trigger. So let's see if we can find one setting up. There's one really close. Okay, this is Swiss franc. It broke out, that's what the LE means. We were waiting for it to pull back across the bottom of the channel. When it gets down here, we're going to buy the Swiss franc going long. Now what does buy the Swiss franc mean? Buy the Swiss franc basically means this. Okay? It means if I put up $100, I am given a line of credit for $10,000. Okay? If I put up $1,000, I'm given a line of credit for $100,000. Okay? If I put up $10,000, I'm given a line of credit for, you get the pattern now, $1 million. Now, these things are quoted in 1/10,000. Now, just picture this. If I flew to Europe, and I took $10,000 in a briefcase, and I flew back 2 hours later, but when I was there, I converted it to euro, and when I came back, I converted it to dollars. I probably have more dollars because the euro's been going up. So, how is that determined? It's determined by, this is going to be a line. Let's see if I'm logged in on this. Hold on. I'll take this trade if I can get logged in fast enough. Let me look at a daily chart. Oh yeah, I gotta hurry. That's a good trade. Okay. Come on, where's my broker login? Oh, it's case sensitive. I'm too slow. I'm going to miss the trade. Damn it. Let's wait and see if it pops me in. I'm going to go long the, what is this one? Swiss franc. Come on. Come on, computer. Get on. I want to go long, JR. I'm going to go long. Because the bars are blue, I broke above resistance. The stupid thing that, it'll hurry. Okay. Hold on just a second. Dang it. I missed the trade. Maybe not. Swiss franc. What is that at? I'm going to buy it. Hold on. $84. That's fine. I'll take it. Okay, see what I got. Dang it, it jumped up. Alright, it jumped up a little bit. Okay, just a second, I got that on. Now, let me show you this. It may fail me. I've got an order down there at 83 to fail me. Okay, what I did is I said it broke out. which is a bullish sign. It's not going to, we're not looking at oversold or anything. This is simpler than that. Axiom number 2, well, first off, JR, support is an upward movement in price. Axiom number 2 states that the failure of resistance is the formation of a trend. We broke resistance, but we went back across the channel. Because we went back across the channel, I know that I should go back up. Well, I placed an order there, but they didn't fill me. I was trying to buy $2.5 million worth of Swiss franc, but they didn't fill me, okay, because it didn't come back across the channel here. All right, so I was looking to go long the Swiss franc. So I didn't get picked up. I would sell it back across the top up here. It's a target. It's a scalping system. For every 1/10,000th of a move, it's 1% on invested capital. Okay? So for me, if I get filled on that order, every 1/10,000th of a move, I'd make $250. Well, to do that, I had to put up $25,000 in capital. $25,000 will get me $250 every couple minutes. Okay, there's a lot to trading foreign currencies. There's a lot to it. But I have a pending order sitting out there to see if it'll get me. Okay, it has to pick me up outside that channel. So there's quite a lot to it. I don't think there was a really, really neat announcement today. Do any of you trade foreign currency? Anybody in this room trade foreign currency? You can trade it in the evening. I want to find their news. Search. Would like to? Okay. What I'm going to do, maybe I'll do a special just Forex night, and maybe we can ask Metastock to do it. Okay. They had a news event, a big news event out about Reuters and the CME. The CME is going to start the first exchange for Forex. And I was trying to find it. So, to teach you foreign currencies, I would probably have to sit down and spend some time with just showing you a whole entire system. Right here, there's one that's, you buy it as it goes through there, you sell it as it goes through the top. Okay? 83. I might get filled on this. It's got to drop 3 more cents and I'll get filled on it. But anyways, that's a quick 90-second overview of foreign currencies. Basically, they trade all night long. You can chart them, and you have to trade them in real time because there's a lot of risk involved with them. Any question on those? They have some classes online for foreign currency beginning traders with Metastock. One of the guys, yeah, you have to use the 5-minute chart. Yeah, you have to use the 5-minute chart. Because of the risk between the other charts. These things move more than your risk capital. Hey, Devin, can you post when your foreign currency classes are in this room? I'm going to get filled. 80. 82. Can you post when Peter Delisle's foreign currency classes are? Like, just a link to it. No, yeah, it's in the ID account, Scott, yeah. No. Is that the limit? No, I could buy as much as I want. I could take down $1 billion currency position tonight. The guys that I'm partners with would have a heart attack. No limit. No limit. Oh, for the lowest? No, 25,000 is list, yeah. Yeah, that's exactly right. There is a place called Micro, no limit for lowest deposit, $2,000, but the lowest you can take down is a $2,500 position. And we might get filled. Let's see if we do. No. Interactive brokers, their night desk, is beat a bunch of thieves. They never feel you very good. Okay, any other questions? What would you guys like to learn about? I kind of showed you everything that I wanted to lay out. What would this small group of people like to learn about? Would you like me to review some trade setups that I set up today? I showed you the one that I didn't do very well, but I could show you one of the trade setups. All right. Here's a longer-term setup. This is an Amgen one. Let's do Gilead. Yeah, I can take you through the process. Okay, this one has dropped really big time. It's called an alligator. That means it dropped. We talked about that. What happens is there is going to be a little bit of a change in trend, but this is in the NASDAQ 100 future. This thing got pummeled on the way down. Well, it closed really high. I bought it and sold it in the first 5 minutes this morning. But what happened to it, is that today? Yes, it is in the intermediate scheme of things, it's still bullish to an intermediate level trader. Okay? So you have an intermediate higher high, higher high, higher high, higher high for the intermediate ones. We haven't broke this intermediate low, so we're bullish. Okay, so this is an intermediate level trader, trades for as long as 3 to, I'm just checking that position to see if I got the, they trade for 3 to, I'd say 1 to 3 months, 1 to 3 months. So you'd be looking at a 3-month pattern if you thought you were going to come back up for a while on Gilead. So on Gilead, there's a couple different plays I would consider doing. Tomorrow, I think I'm going to do what's called a bull put spread. I'm going to sell an at the money put, buying out of the money put, and hope it goes up. All right, because I think Gilead could go up. I'm going to probably do the same thing on Amgen. So it won't tie up very much capital to do that. All right, so what I do is I sell this put and buy one put out. It goes up, I make money. It's called a bull put spread. You can look that up on the CME site. And I would do that just because of the position in the trading range. Option trading, you don't have to get, well, what's the entry technique? What's this? I just have to put that trade on. If it goes lower, I have to change the trade by shorting stock. Okay? So that would be a pretty brainless one that I'm looking at for tomorrow. Today, I just took it when it took off a high, and I only rode it for a little bit on the way up. Okay? Now, let's look at the next one, US colon AMGN. It's the same thing. It's an intermediate pullback. When the market gets choppy, I like looking for real big, deep, ripping pullbacks that just look terrible to most people because those stocks should come back to life. Look at Amgen. It's sitting way down on previous resistance. It filled that gap. It's come back down. It's a major component of the Gilead and Amgen are major components of the NASDAQ 100. If the NASDAQ people start to rotate out of some of those sectors that are on the high end, they're going to rotate into these sectors, okay? So this will be a good thing to look at for Amgen. And I'm thinking about a bull put spread on it, or I may just buy it as it starts to develop intraday. I do have a resistance level coming up, and the last 4 pivots for the minor pivot trader are not in good shape. But I'm going to use intraday entry techniques to build a position into a swing trade, or not a swing trade, but an intermediate level trade. So something I can hold over the next few weeks. Okay? So I'm going to use intraday entry techniques to build positions into this. Any questions on that? No questions on it? Okay, that's that one. Yeah. Technical indicators do I use? Is that what you're asking me? Well, I don't. I'm just going to look at the 5-minute chart here, and I don't really use any technical indicators. Oh, technique, I use some techniques for buying it. Like on this one, when I bought it, it was at the open today, right, coming across. This was a perfect symmetrical triangle last night, and I thought it was an easy trade. It was a deep pullback with an intraday symmetrical triangle. Okay? Here's where it broke above the symmetrical triangle. I bought it going up. Right here is where I sold it. I almost got the high of the day. And what technique did I use to get the high of the day on that? I showed you a failed one on NYX, but the technique I used on the high of the day was this. US @NQ. I was looking at the NASDAQ future. Why would I be looking at the NASDAQ future and Amgen at the same time? Nothing's dropping. Future tells you what the market does the next day, yeah. Amgen's a major component in that. So within 5 minutes, the first 5 minutes, it hits this level right here. Okay, it just bangs that level. Boom, hits it right away. Okay? Within 5 minutes, I've made all my money. NASDAQ came up and hit that. Well, I thought NASDAQ would reverse. I mean, if it jumps that far in 5 minutes, that was half its ATR in 5 or 10 minutes. I'm like, it's done. It's done for a minute. So I took a quick profit. Well, that profit, I was glad. It got me out at the high of the day because I used that technique. Okay, just based on what the futures were doing, because I knew that was a component of those futures. Okay? I might have got triggered into that Swiss franc when it dropped down there. Oh man, it's 1 pip away from getting triggered in. 1 pip away. Okay? It hasn't triggered me yet. So, yeah, Amgen is on that NASDAQ 100. Matter of fact, the NASDAQ 100, there's 10 stocks that make up the whole shooting match. If you go to NASDAQ.com, they make up 40% of the NASDAQ 100 are AMGN, SBUX, these guys make it up, CSCO, Intel, MSFT, which got crushed today, I think it did, if I remember right, SBUX, Intel, Gilead was one of them. 1, 2, 3, 4, 5, 6, 4 more. Qualcomm, 3 more. I can't remember the last 3. But those really make up the whole entire thing. Okay. That thing might trigger me in just a second. I'm just watching it. It's lame. See, it's at 88, and they won't even fill me at 83. It's sitting at 88. Oh, Google, yeah, Google's one. You're right. And Yahoo, Google and Yahoo, those are 2 of the last ones. Google, Yahoo. Yeah, Google, Yahoo. I'm getting ripped off by this. These guys, oh, now it's at 82, but they wouldn't fill me. See, that's something if I teach you Forex. Oh, I did. I just got filled. I just got filled on that. Let's bring it over here. Okay. Now it's turned $50 a tip. Okay, let's maximize this. Let's see if we can make any money. Okay, I'm going to put in a sell. I got to put in a sell here. Just a second. At 1.84. Oop. Almost transferred that and I didn't need to. 84, I got in at 83. Let's wait till the top of the channel. Top of the channel is, let's wait, see. Alright, well I got a trade filled tonight that I'm going to have to watch. I am long the Swiss franc at, and it's jumping back up my way. So I got filled at 0.03. Here, I'll give you the fill. I better bring it up so you can see it. View executions. It's not letting me bring it up. Maximize. These are all the trades that were in there today. And I got billed at 12283. Now, I'll show you what that'll make me if it starts to move up in the next little bit. It's about a 30-minute trade. 12283. So, okay, yeah, that's a good question. If it goes to the top of the channel, how much will I make? Okay, there's the top of the channel. The top of the channel is 12289. 89 minus 83. So I'm going to go to 89 minus 83 is 6 pips. 6 times 250. What's 6 times 250? 1,250 bucks? I'll make 1,250 bucks, which will make me feel better for that NYX trade. So 1,250 if it comes back across the channel. Okay. Any questions on that? It's about 6 pips higher to hit that across the channel. No questions? Well, it turns against me about this particular system. I have about a 94% accuracy on as long as there's not news coming out. I have this thing set up to should alert me if news comes out. If news comes out, all bets are off. But if it does go against me, when it goes against me 10 pips or 10% of invested capital, not the 10% of 2.5 million, 10% of the 25,000, if it goes against me that much, then what I'll do is I'll start trying to get out at break even at 20 pips away from me. 20 pips would be about $5,000. I'll close it. Okay? Yeah, 20 pips stop on this, but I have to make a minimum of 3 pips to do that. Because it's called expectancy. I have such a high degree of accuracy in this system, I have to make a minimum of 3 pips. Okay? If I can make 3 pips, then I have the ability to kind of stay in business and keep trading. Okay? Does that make sense? Okay, so I can show you the back testing results on that, but it's not going my way right now. What are the most important factors to start with Forex trading? Well, ethical broker, because see, people in Forex, they can make money off every one of your trades, no matter who, like if they send them to you, if you get sent to a broker. So in my mind, the most important things is a very ethical broker. I would go to www.zaner.com. I make no money sending you here. I would only ask for Lou or Matt. Matt Zaner owns it. Okay? Just ask for either one of them. Then what they do is they determine your account size and try to help you get to a specific place to maybe help you with your trading. For example, if you have a $500 account, you'd be trading with FXCM. Now, where that says FCA, I just broke support, that means I have to try to get out at break even. Okay, I don't even try to make profit on it. I immediately try to get to break even. So if that jumps up to break even, I'm out of it. Okay? So, anyways, where that kind of changed the colors, I'll try to get out at break even. Alright? Now the SC's going away because the bar hasn't closed yet. Alright, but I got a red bar and I just want to be out at even. So now I have to adjust my order. Okay, because the bar changed color on me, and that's just one of the rules in this system. 83. It'll be 84 because they charge me a small commission. Okay, transmit this. Okay, I had to change my order to break even. what are the trading costs? There are no commissions, just the spread, but the spreads are astronomical. Like right now, I just spent $750 in commission. Okay? That's a lot. That's a lot to spend. Yeah, $750 in commission is quite a bit. So there's really no trading costs with it. Except for that. I mean, as far as trading costs, you mean like, does the broker charge you a commission? No, some do, but most of them don't. They just charge you the spread. So you can get in on a bid, get in on the ask. So I misspoke. There are high trading costs in it. High cost of trading these. Because you have to pay the difference between the bid and ask. Yeah, by going to certain brokers, you can cut down on the spread. If you go like, the weakest broker would be like FXCM. FXCM would charge you, like 5 pip spreads. Okay, but you only have to put in $500. Just a second, let me read Scott's comment. Yeah, it's really hard getting good, not bills, but good brokers. Really, it's hard getting good brokers. Okay? So, FXCM's not a super good one. Then there's one up from that called Icon Direct. They take $2,500 from you to open the account, but they'll give you 3-4 pip spreads. Then there's one called Hotspot. Hotspot will take from you 4 or 5 pip spreads, or excuse me, a little bit lower, 2 or 3 pip spreads. And then you have one called, but Hotspot requires $7,500. Then you have another brokerage firm called Kernex. Kernex will give you like 2 pip spreads or less. They're really a good brokerage firm, but you have to put $30,000 up. So in Forex, the more you put up, the better you get treated. Now, Interactive Brokers in the evening is a terrible Forex broker. During the day, they're okay, but in the evening, they're just horrible. Interbank's a Salt Lake company. I don't know them very much. One of my friends, Noah, uses them. I've never played with them too much, so I couldn't tell you or comment widely on Interbank. Okay, not sure. 2 to 3 pips on Interbank. Is that what Interbank is? Yeah, I paid 2 pips right now on this, but we're seeing that it's heading a little bit lower. Yep. Okay, so I've never used them. Maybe Devin's traded with them. But if you guys don't have any questions, or do you, I'll sit here as long as you have questions. So any more questions? I mean, I'm going to start this class again on Tuesday. You're free to attend it. I started it last Tuesday. And it's just some basic overviews about trading. Yeah, I'll do one on Saturday. There's one on Saturday, JR. Any of you want to come? I'm going to, on Saturday, well, I work on one on Saturday. You're welcome to go to it. SE means short entry and LE means long entry. Okay? So SE and LE. It means prepare for a long entry, prepare for a short entry. Okay? Saturday's from 8 Mountain Time to 10. On Tuesday, same time. On Tuesday at the same time. Did that just jump up there? It jumped up. It might have gotten me. One more pip. One more pip. And I get it. It jumps up and fell right back down. So, I'm just trying to get out of that position at break even because the time's changed.